now. So I want to thank everyone for joining us this afternoon. If you are interested in networking with others, either during or after the call, please share your details in the chat section. Um, my name is Lee Johnson, and I am the co-founder of Value Investment Partners. We are a small private equity firm located in the Northern Virginia area right now, and it's a nice and sunny day in Virginia. I'm looking outside of the window as we speak, and I wanted to thank you for joining again. Today, our topic is going to be real estate to retirement using crowdfunding platforms. Crowdfunding platforms aren't something that was around more than a decade ago. Crowdfunding platforms probably came to be, I believe it was around 2017 when they passed the Tax and Jobs Act, which basically democratized individual investors having access to these types of opportunity. I can tell you from personal experience in probably 2016 when I really started to get into fixing and flipping and passive real estate investing. I was doing a lot of my work using hard money lenders, right? And I liquidated a portion of my 401k when I created my self-directed IRA. And by using my self-directed IRA, what had happened was in Northern Virginia, where probably the average price of a home is selling for about $400,000, $500,000. If I wanted to make a hard money loan, I did make hard money loans at that point in time, but I wasn't doing it the correct way, right? I would go to a buddy and the buddy would say, hey, I need $50,000 so that I can do this renovation. I would be like, yeah, give me a promissory note and exchange the money. If I was going to be doing that properly, I should have had the promissory note, but I should have gone to the county wherever that property was located. And what I should have done is record that promissory note against the property. What would have happened in that particular instance is if that property were to be sold before my debt was paid off, when they did the title search, it would have come up as me having a debt against that asset. The problem that you have is unless you are able to get into the first trust position, it's very difficult to sue because whomever is in first trust position, if that asset should go to foreclosure, whoever's in a superior trust lane will actually have more control over the property. So as I was doing a hard money loan, right, but I wasn't recorded, and if I was recorded, I would have been in, at best case scenario, I would have been in second trust position, which means that if the first trust position forecloses, I get wiped out. So something to think about as you are working on your journey. But one of the things that I wanted to share with you is that I came into crowdfunding platforms because I wanted to secure my investment nonetheless. So let's get started today. And one of the things that I always have is my disclaimer is that, my name is Lee Johnson and I'm with Value Investment Partners. I'm just an investor expressing my personal opinion and not a financial advisor, attorney, or accountant. My suggestion for you is that if you find anything here of value before you move into a position, I would strongly suggest that you consult your financial professional before making any financial decisions. One of the things that I wanted to let you know is that we do not accept any money from any sponsors on these platforms that we're sharing with you today, right? Including postings, reviews, referring investors, advertising, etc. If we do share something with you, it's one of the services that Value Investment Partners has that could actually help you in building out your wealth generation platform just the same, but that's the most where we would go. The reason why I share that with you is because I want to let you know that the information that we're sharing here isn't being polluted by someone putting money into our pockets, etc. We just want to share with you what we've been doing and hope that you can do the same. And if we can help to accelerate your path to your goals, more the better. All right, let's click on. So here's the agenda for today. What is crowd real estate funding investing? Right? If you haven't heard of the term, you're probably saying, "Hey Lee, what is that all about?" Right? Then we'll look at the different types. There's different types that you can have: preferred equity, you can have just debt. There's many different ways that you can leverage these different platforms to invest. A look at PeerStreet. PeerStreet is the platform that I personally use, right? I use that both through my self-directed IRA, and I also have a personal account that I use, and you're gonna love PeerStreet when I share it with you. And then there are some various other platforms that are available. Of course, I haven't explored all of them, but I do know about them. I could tell you from personal experience, my first real estate syndication that I ever invested in was a firm called RealtyShares. If you Google RealtyShares.com today, or you put that into your browser, you will find that RealtyShares is now defunct. That company is no longer in existence, right? So you have to be careful with the platforms that you're working with, right, to ensure that they'll be around. Good thing for me, I only have one investment. What happened with RealtyShares is that, some holding company came in to take it over, and I have one asset. I think it's about $15,000 that I have invested in some student type of housing. And now student housing is coming back because more students are actually more students are in are going back to school in person. So that asset didn't perform during the pandemic because students went home and studied from there. But now you'll see that students are back on campus and things are going just a little bit well. This is totally going to be an interactive session. So if you should have any questions, comments, concerns, please do come off of mute or put it into the chat. I'm looking at the chat at the same time as I scroll through, but this should be an interactive should be an interactive session, right? But my hope is to get you out of here within 1 hour's time frame. All right. So what is crowd real estate investing? Right? Similar to a syndication, right? Individual investors pool their money, right? Group investing. A lot of people don't know this, but a lot of the major transactions that are out there, right? I'll give you an example. The Washington Commanders, right, are potentially up for sale. So I said to myself, well, what does it take in order to buy a NFL franchise? What I learned is that the NFL wants there to be one face as the owner or the ownership group. They want usually one face, and that one face has to have at least 30% interest in whomever's coming together, right? So what happened in the article that I read about this, it basically talked about what Magic Johnson was able to do when they purchased the Los Angeles Dodgers for about $2 billion. And what they did is they brought a whole bunch of different investors together in order to put together the $2 billion that was going to be necessary in order to purchase that asset. So individual investors pool their money to reduce risk, boost returns, invest affordably in real estate. Now, many platforms will allow investments on both the equity, Crowdstreet.com, RealtyShares.com, and PeerStreet, right? So literally, if you want, you can't leverage RealtyShares anymore, but you could leverage CrowdStreet to go in and make an investment into a syndication. You could, you know what, when I update this slide, what I'm going to talk about is Realty Mogul. Realty Mogul is still out there. One of the things that you will explore with Realty Mogul is that their IRR levels and their equity multiples are pretty low, right? I see realty shares much in the same fashion that I see a REIT in, right? They're probably more tied to the platform and the operator than they are to the LP investors. But let's talk about it just a little bit. Investors pool their money into a single investment. That single investment, as I mentioned, it could be a sports franchise, it could be a business, right? It could even be a multifamily apartment complex like what we do over here at Value Investment Partners, which dramatically lowers the barrier to entry. Why? Because when you're investing in this space, you are investing in a multi-million dollar asset, right? So, all of this is working off for some type of leverage. But hey, one of the things that I love about real estate is that you can get control of an asset, right? You can get control of an asset by only having to put down 20 or 30%, right? The rest of it, you can put some type of debt on top of it, and you'll be free to go, right? So investors pool their money into a single investment, which drastically lowers the barriers to entry and risk aversion. A multifamily asset may cost several hundred to several $1 million to purchase. However, on a crowdfunding platform, investors might only have to pay $1,000. So if you are going to a platform such as Realty Mogul, what you will see is that their buy-ins, and the buy-in is the lowest amount, the minimum amount that you would be able to invest in that asset. And it's typically going to be about 35, maybe $40,000, right? But that's if you're going to go in on the equity position. When it comes to PeerStreet, right, with PeerStreet, it's just debt, and it's typically going to be short term, right? I'll show you later. But when it comes to PeerStreet, you get to control by their automatic investment algorithms. You get to control the inputs into how you get pushed into an asset, right? I'll share that with you in just a little bit as well. I don't see any questions, so I'm going to continue to carry on. All right. So what is a crowd real estate investing, right? Basically, as I mentioned, when that legislation was brought forward, it democratized access to these opportunities. Once upon a time, you would have to be in the know in order to be able to invest in any of these platforms. Prior to 2017, I don't believe that there were any public forums, right, where you would be able to invest in one of these assets, right? So for instance, you would have to know the developer or the syndicator and personally be on their buyers list in order to have access to this, right? But now with these crowdfunding platforms, the only requirement that is typically going to be there is that you are accredited. And I say accredited with a wink because so far I haven't been verified on my income standing when it relates, right? But you have to sign in and say that you are an accredited investor. What does accredited mean? Accredited means that as a single individual, you have income for the past 2 years of $200,000, right? It changes if you are married. If you are married, the buy-in is $300,000 for the past 2 years, or having a net worth of $1 million, not to include your primary residence, not to include your primary residence. So that is the definition of an accredited investor, right? So here you have it. Do yourselfers, large capital requirement, knowledge, time, retail prices, right? On the other side, you have the institutional folks, pension funds, reach, highly competitive, but lower yields, right? What you can do using a crowdfunding platform is you can help to bridge the gap, right? So this platform goes out to the masses and they will say, hey, we have an opportunity that is available. Do you want to buy into it? You say, I do, right? What you can do is on the one that I'm going to demonstrate today is for as low as $1,000, you can get into a short-term debt structure, right? That's going to pay monthly interest only, right? And typically on this platform, the instruments that are being shared are probably 7% or better. I get it, right? Inflation is at, I think inflation last month came in at 7.7, right? So you're still trying beat inflation, but hey, I was on the phone with a mentee the other day, and we were having a conversation about the rates that were being offered at Bank of America or Wachovia. If you go there, I can guarantee you right now, if you go to Bank of America, they're offering 0.01%. So if you wanted to keep your money there and it gave you the warming, comfy, you really didn't have to worry about your money, you can leave it there at Bank of America. Nothing is wrong with that. That's a thing that's plausible and a lot of people do it. On the other hand, you can put this money into work for you in one of these short-term vehicles, and you can reap the rewards as well. You can, on the platform, you can get a rate at 11%. It's just that probably is going to be a little bit more of a risky loan. Like the LTV on that particular debt instrument is going to be probably about 90%. I'll tell you what I do on the platform as well. So how does it work? Developers, rehabbers, etc. They have a real estate project, right? And that real estate project could be a single family residential flip. It could be a small multifamily asset. It could even be an apartment structure or some type of commercial vehicle. I'll tell you, on PeerStreet, I avoid all of the commercial stuff at the same time, right? And then you have investors. That's you, me, and everyone else who wants to put some money to work, right? You go on to the platform, right? Because these guys are seeking financing, and we have investments that we can go into, right? So this is where the marker is, right? In PeerStreet, CrowdStreet, Realty Mogul, they're playing in the middle, right? What I like about PeerStreet is that their fee is coming off of the loan. So if you see on the platform that a loan is being displayed at 7%, that means that PeerStreet is probably charging them 8%, and they're taking that 1% spread for their fee, right? This is a simple transaction. It works out in many different ways. I'll show you as we move forward, right? As I mentioned, there are, and apologies for the type graph there, but there are different types of crowdfunding that are available to you, right? The two common ones are going to be debt. That's what you have when it comes to PeerStreet, only debt. There is not going to be any equity, right? It's only debt. When that transaction is closed, you will have collected your monthly interest payments, right? And then you will be returned your principal, right? The other one that you're going to see is common equity. Common equity is what you're going to get with Realty Mogul, what you used to have on RealtyShares, Fundrise, and some of the others, right? That's where when the asset is sold, because you are in an equity position, you get to reap the benefits of the upside once it sells, right? What I like about these platforms is you do not have to be in the know of who the sponsor is. You can just automatically do your due diligence with the PPM and decide to invest in with them, right? We've seen it, but we haven't seen it very often. But you could have a preferred equity, and typically when there's a preferred equity, that means that you're going to be able to get paid out somewhere in between the debt and the common equity that's there as well. different types of terms that are available to you there. But one of the reasons that I want to continue to stress upon is the reason why we are even having this conversation today is because I'm a firm believer that capital should always be working and capital should be working at its highest opportunity that is available. What I do and how I use these funds is whenever I get a cash flow distribution. So you guys know I'm already invested in a number of different multifamily syndications, right? Every time I get a cash flow distribution, that money goes into a bank account, right? On the day that that happens, I immediately transfer those funds from that bank account over into one of these platforms. And then I look for some type of short-term vehicle, short-term being 1 to 6 months, where I can put that money to work. And as I build up that capital again, because the buy-in is typically going to be $50,000 into a multifamily syndication, as I build up that capital again, I'm waiting for it to go back into another multifamily syndication where I can get some of the common equity or the preferred equity. All right. Let me pause there before I share an example of PeerStreet. And this is a real view of it. It's more than a year old, right? But it is a view of it. Any questions? I see a question in chat. What is the minimum investment? So when it comes to PeerStreet, you'll see it on the next slide. But the minimum investment on PeerStreet is $1,000, $1,000. But PeerStreet, because it's also pulling money for you on a monthly basis, they have something here called automated investing, right? And when you are doing automated investing, it actually allows for you to move into an investment at $100. Right? So one of the things that I like about PeerStreet is PeerStreet has said that they have never lost a loan, right? This is what attracted me to them several moons ago, right? This is what attracted me to them, right? It is that they said that they were using big data and all of these other types of things in order to make sure that the investments were working. And they haven't lost a loan of mine so far, every single loan. Now, I'll admit to you that there are a number of loans that are on the platform that have gone through REOs and different things of that sort, right? I think it's about 10, but I haven't lost any money because what I'm doing is I'm leveraging PeerStreet and their attorneys to go after the debt holder. All right. So what I wanted to share with you is you have awaiting loan closings, right? Because they do their due diligence. On here, at that point in time, I can tell you this number is towards 8 right now. And my cumulative returns is just under 50%. At this point in time, I've been investing on the platform since 2017. So yeah, I've gotten a pretty healthy return. At this point in time, and I think we put together this presentation probably about 2.5 years ago. At that point in time, I had earned on the platform $32,459.65, right? So over here, you connect this over to your bank account, right? Over here, you have your positions, you have your transaction history, all of the monthly. Then you have your statements that are going to be available there as well, right? So it's a pretty simple, common thing to do as a whole. And it makes a whole lot of sense to me going forward. But over here on the next slide, what you'll see is how you break that down, right? On the platform right here, automated investing, right? I have it turned on. You can turn it off. there's no real sense in turning it off. Otherwise, you will never be struck into a loan, right? But over here, you'll see there's bridge loans, there's cash offer loans, there are 30-day notes, right? And to your question, Tiffany, you can reinvest small balances, right? Whenever the cash balance reaches $100 or more, right? But you see, minimum buy-in usually is going to be $1,000, $1,000. And over here, what you can say is this is the minimum or the maximum that I want to invest in any particular loan. And that's my own strategy, right? And you could also say, this is how much you want to limit your entire portfolio to be invested in bridge loans, right? This is what you can do to invest entirely in a bridge loan.
Hey,
Now,
Lee, I have a question.
Gus, go ahead.
So I'm assuming that at the end of the year, you get some kind of tax form based on your gains so that you can actually do your taxes and that stuff. Is that accurate? Is it like doing any other portfolio investment kind of stuff?
No, this is you're gonna get a 1099 INT because this is interest that you are being paid off of these loans. So you'll get a 1099 INT. This is not like if you were investing in a syndication where you would receive a K1, right? This is going to be a 1099 INT that you'll receive.
I see. Okay. Okay. Nice meeting you, by the way.
Yeah, it's interest. It's the same as if you were having the money inside of a traditional interest bearing checking account, right?
Hmm.
What I like here is the fact that you can actually get a better return on the money, right? So I would take and pay taxes on 4%, which is what PeerStreet is offering today, right?
Hmm.
Versus paying taxes on 0.01%, right? Take the 24% from me, right? But I actually made more. And if I call it the VIP flywheel, right? Because once the capital is invested here,
Hmm.
it's going to grow with its own velocity.
Oh, I see. But so no matter what investment you decide to invest on in here, the the return rate is 4% right now. So
Well,
or does it change based on the kind of investment that you're doing?
no, it changes, right?
Ah, I
Because
see.
as you see over here, there are three main criteria so that you can get automatically pulled in. I don't know how many investors are on Peer Street today, but in 2017, 2018, when everything was good around real estate, if you didn't have automated investing set on the platform, by time you got the email and got onto the platform to look at the investment opportunities, they would all be fully subscribed, right? So what you do here is you say, okay, I want to invest in a bridge loan, right? And you probably can't see it here, but it's 12, 24, or 36. That's the maximum that you're saying that you want to invest in this loan. As you
That's
can
a
see, for me,
that's
I'm
that's
setting
that's
this,
the term. Is that the term? 12 months.
yeah,
The term.
12 months,
Got
12,
it. Okay.
24, or 36. As you can see from here, right? I put 12 because I'm only here for short-term loans, right? I don't want to go beyond 12, right? The maximum LTV that's here, and what we'll do is next time when we have this slide, we'll show this picture and then we'll break it out as I move forward. The maximum LTV that you have is 60, 65, 70, or 75%, right? I don't want to be in a loan that is 80% LTV because if you have to foreclose, right, you got to have some meat on the bone, right? So here I'm saying the maximum LTV that I want to be struck into a loan is going to be at 65, right? And then the minimum yield, there's 8 plus, 7 plus, 6 plus, right? I'm not here to invest in the platform for 6%, 7%. I could get that at other places. I'm here to have the money work for me at 8+%. So what happens is if there's a loan that comes through that meets this criteria, PeerStreet will automatically invest me into the loan, right? I will get an email from PeerStreet that says you have been pulled into this loan, right? And you have 24 hours to log into the platform, do your due diligence, and decide whether or not if you want them to cancel you out of that loan, right? So it's not, I have automated investment on, boom, it's only going to go in, I can never get out, right? What they do is they send you the email. You have 24 hours to let them know that you want to be pulled out of that investment, and then that's where you go and you exit out of that investment. Does that make sense?
Yep, makes complete sense. Thank you.
Now, one of the things that they have, as I mentioned, because you're constantly getting interest payments, right? Eventually, the monies that you have in available cash over here, right? The monies that you have in available cash reaches $100. You don't want that money just sitting there, right? Because they're not giving you any type of yield on the money that's just sitting there. Now they are, but they weren't before, right? So I would say, hey, trigger this such that when it gets to the $100, right, you can automatically have the money go over into another investment. I hope that makes sense. But this is just the alchemy that I've put together to always have the money working, right? PeerStreet, Monday through Friday, every day at 3 p.m. will take all of the new investments that are there and push them out to everyone on the platform. If you want, you could probably set up a reminder for yourself so that you can go onto the platform at 12 o'clock Eastern. But at 3 p.m. Eastern, guaranteed, I'm going to get an email that says these are the available loans on the platform. Do I want to go in and get it? But like I said, if you don't have automated investment turned on, it's going to be pretty hard for you to get bought in because there are so many people on the platform that are looking at these opportunities. Now, here, right, as I mentioned, you can invest into PeerStreet as an entity. So if you have a self-directed IRA, right, if you have a self-directed IRA and you want to invest on the platform, you can do so as an entity, right? But you could also invest. I have two different accounts, one as my self-directed IRA, one as my personal return. At this point in time, I was doing better, and I'm still doing better in my personal account, right? I had 32% cumulative returns with an 8.8 annual return. At that point in time, I had, almost $9,000 into the account at that point in time, right? And it's the same philosophy here, but this is how you keep it working. The money
What?
is always moving, the flywheel is always going. You're earning capital, you're earning returns at that time. And I haven't found another better way outside of playing the lottery, and the lottery is in your favor. But this is something that I've been doing. And if you guys have another system, I really get excited in having these types of conversations. So if you know of a better system, please do. Let's have a conversation.
When you say entity, you mean LLCs too, right? So my LLC can actually.
LLC or trust or anything like that is how you can.
Good. It's good.
All right. How the question that you may have is, how is this possible? Right? This is possible through a term called pari passu. And I'm not French, so maybe I pronounced it incorrectly. But pari passu allows all of the investors that are pooling their capital into this investment, it allows each one of them to be in equal position. So as you remember, when I was talking about me doing the hard money loans, right? When I was in the hard money loan, I was in a second or a third, maybe even a fourth trust position. In certain instances, because of my naivety, I wasn't in any position at all because I trusted my friend, gave them the loan, and didn't record it at the county, right? With PeerStreet and others, right, Power Pursue allows everyone to come in and secure first trust position. What that says is that if the originator of the loan or whoever took out the loan, I might not be using the correct term there, took out the loan, what they're saying is that they do not pay, PeerStreet has attorneys on staff who will file the foreclosure and necessary to take back the asset and then sell it on the market again. Now, pari passu is something that you definitely want to remember as you're doing all of this. But I wanted to share with you that, hey, there are many platforms that you could be using in order to get here, right? And some of those platforms, and we share the deck on our private Facebook group at the same time. So if you wanted to get access to the links and things of that sort, it's available for. Let me copy it. This is where we sourced that from, right? But if you wanted to, these are different things that are out there. As I mentioned, RealtyShares, the URL is still there, but it's not accepting loans anymore. Some of the other ones that I mentioned is CrowdStreet, Realty Mogul, Fundrise. I think that they got lower ratings. Realty Mogul is still there at the same time. But if you were to put into your browser crowdfunding, you'll find different platforms. One of the platforms that I recently found is something called Fund That Flip, right? And what I like about Fund That Flip is that they have higher yields on their platform than what I'm finding on PeerStreet. I just have to continue to do my due diligence and research on that platform to understand how it really works. I want to understand, well, what's going to happen if the person who took out the loan is unable to pay, who's going to be responsible or on the hook for foreclosing on the asset and different things of that from that perspective. So just a little bit for you to go out and continue to do your own research to determine which one is going to work out best for you. So, as I mentioned to you guys, I wanted to try to knock this out within 1 hour. But to summarize, you have to set your goals and your criteria. There are a number of different platforms that are out there, right? And one of them, two of them, three of them may be suitable for you. I have personally invested in three of them that I've shared with you, and I'm exploring the third one at this point in time. What I would tell you is that you have to review every single opportunity. And one of the things that I have been doing probably since the pandemic on PeerStreet is I no longer invest in judicial states. I only invest in non-judicial states because if you were to invest in a judicial state, the foreclosure process means that you have to go in front of a judge in order to secure the property back. And that can be a very labor intensive, long duration to take back the asset. So I'm invested on automated investing, right? I have 24 hours before I'm struck into a deal and I can't get out. If I find something that pulls me into a New York investment, right? Or any judicial state. Florida is a judicial state, right? I immediately go in and I cancel those investments because if there is a foreclosure, I want it to be like that, right? So that's one of the things that I have learned by investing on the platform. And I put in a request to PeerStreet to actually to put that up. they could just have a tick box that says invest in judicial states versus non-judicial states, right? And it would solve all of the problems that I have had on the platform at that point in time. But you never know. Yeah, if you just put into your Google non-judicial states, I do have one saved. I could share that with you too. But it's easy enough for you to find on your own. Just do non-judicial states, non-judicial foreclosure states, and you'll have your list right there. And it comes to mind because on the platforms, there are certain states where there are a lot of originators, right? And they typically work within their circumference, right? You don't have a guy who's in Maryland probably putting on loans for California. So they're clustered for the most part. And if you see something in a judicial state, you can go and invest in it, right? The LTV might be within your criteria. It might have a high yield on it. If you want to invest in it, go ahead. I'm not saying that you shouldn't invest in it, but what I'm saying is that you would probably want to be more judicious if you're going to invest in it at that point in time. All right. Thank you for the questions, Gus. All right. So I want to open it up to questions before I go back into presentation mode. But are there any questions that anyone has? And if I could, I typically like to share this on social media for trying to gain more of an audience. So if you would come on camera, I'm gonna snap a little bit of a picture. All right, going once, going twice, 3 times. All right, let me do it. Thank you. Thank you, Gus and Tiffany, for coming on. All right, are there any questions that you guys have? I did such a good job of explaining it to you.
It's very interesting. I didn't know this such a thing, such platforms existed. So it's very interesting actually. So thank you for actually doing the presentation.
All right, no, and if you have any questions after this, you can always send me a text message, right? And this is how you get in touch with us. We have a calendar, right? You can, put time onto the calendar, or if you want to start an exchange, but you don't really want to get on the phone, just text meetup. That way I know that you came in from a meetup and you might have a question right there. But our number is 571-444-8474. You could just, use that number to get in touch with me. I just want to let you guys also know is we're having an in-person meetup on the second Saturday of the month. But of course, because it's the holiday, this meeting that we're having right now is usually on the fourth Saturday, right? But because of the holidays, we did it today. And next month, we'll be doing it on the second Saturday and the third Saturday as well, in order to meet up. The networking event is at a coffee shop here in Northern Virginia. If you're in Utah, California, Richmond, Virginia, I don't think that I'm going to see you there. But if you are in the area and you want to have a conversation with like-minded individuals, please do come. And the next one is our educational event. We're probably going to be talking about, I don't know what we're going to be talking about. However, I can tell you that Value Investment Partners, we have moved into offering infinite banking, privatized banking solutions, right? And that has us all jazzed up. We're able to basically help our partners to reduce their risk. I see it as a risk reduction. I see insurance as a risk reduction, as also a wealth building, wealth generating tool at the same time. So if you're interested in learning more about privatized banking, send me a text. The text, please use the word insure with an E versus an I, ENSUR and I'll give you, I'll start a text message, and if you want to jump on a call, we can jump on the call. But I can tell you how personally for my family, we have 4 policies already in effect. We're using those policies because they build out cash value. And then we are using the cash value to also move back into other investments at the same time. When it comes to privatized banking, I have never seen another vehicle where I could actually be making money in 2 places at the same time. So this is why I'm really bullish on privatized banking. And also, hey, eventually one day I'm gonna die, right? But with the privatized banking, I actually think start building generational wealth because I'm gonna leave in my heirs, right? They can take over that, and that's another component that we will have in building out generational wealth. So that's all that we have from a presentation standpoint today. We still have, 9 minutes, or I'm willing to stay on the call as long as we need to address any questions or concerns that they may be there. Are there any questions? Feel free to chime in. Otherwise, I met my mark, and I'll let you guys go. Nothing? All right. Well, enjoy the rest of your weekend. And if I don't speak to you before the holidays, I'm wishing you and your family a happy Turkey Day, right? And we'll talk in December. So then, be well. Thank you. Take care. And we'll see you at the next rodeo. Bye for now.